Hey, how's it going, everybody? Today, we're going to talk about a crucial aspect of trading: how to choose a currency pair to trade. By the end of this video, you'll have the knowledge to make informed decisions and maximize your trading potential. If you are new to the channel, subscribe so that you don't miss future videos. Also see the description box if you also want to download free forex courses, books, and trading tools. Many people ask me about the broker that I use. See the link in the description box. By considering market sessions, currency volatility, and specific factors influencing currency movements, you can make informed decisions that align with your trading goals. Market sessions. Before we dive into choosing a currency pair, let's first identify the different trading sessions: the Asian session, London session, and New York session. Each session has its own characteristics and pairs that are more volatile during that time. The foreign exchange market operates in different sessions throughout the day. Understanding these sessions is crucial for selecting currency pairs to trade. Asian session. The Asian session is characterized by the opening of markets in Japan, Australia, and New Zealand. During this session, currency pairs involving the Japanese yen, JPY, Australian dollar, AUD, and New Zealand dollar, NZD, tend to exhibit higher volatility. Examples of currency pairs influenced by this session are pound/yen, GBP/JPY, euro/yen, EUR/JPY, and dollar/yen, USD/JPY. London session. The London session is a significant trading period when markets in Europe, particularly the United Kingdom, are active. Currency pairs involving the British pound, GBP, and euro, EUR, often experience increased activity and liquidity during this session. Examples of currency pairs influenced by this session are pound/yen, GBP/JPY, and pound/euro, GBP/EUR. New York session. The New York session overlaps with the end of the London session and is characterized by the opening of markets in the United States and Canada. Currency pairs involving the US dollar, USD, and Canadian dollar, CAD, are prominent during this session. Examples include USD/CAD and pound/dollar, GBP/USD. Volatility and currency pairs. Volatility is an essential aspect to consider while selecting a currency pair for trading. Volatile currency pairs offer more significant price movements and potentially higher profit opportunities. Conversely, less volatile pairs may have slower price fluctuations. Choosing currency pairs for specific sessions. To increase your chances of success, it is crucial to select currency pairs that align with the specific session you intend to trade. For example, if you plan to trade during the Asian session, focus on pairs such as GBP/JPY, EUR/JPY, and USD/JPY, as these involve currencies with higher volatility during that time. Factors affecting currency pair movements. Understanding the factors that influence currency pair movements can help you make informed decisions when selecting a pair to trade. Single currency influence. Certain currency pairs are influenced predominantly by a single currency. For example, during the London session, pairs like GBP/USD are primarily influenced by the British pound. Analyzing the strength or weakness of the influencing currency can provide insights into potential price movements. Dual currency influence. Some currency pairs, like USD/CAD, are influenced by both currencies. In such cases, it is essential to consider the relative strength or weakness of both currencies to anticipate price fluctuations accurately. For instance, for USD/CAD to go bearish, the US dollar would need to be weak and the Canadian dollar strong. Trading strategies for different sessions. Tailoring your trading strategy to suit the characteristics of each session is vital. Consider the following tips. Asian session. Focus on JPY, AUD, and NZD pairs for higher volatility. London session. Give priority to GBP and EUR pairs for active trading. New York session. Emphasize USD and CAD pairs for significant market moves. In conclusion, selecting the right currency pair to trade is crucial for successful trading outcomes. By considering market sessions, currency volatility, and factors influencing currency movements, you can make informed decisions and improve your trading strategies. Remember to analyze the influence of individual currencies and adapt your approach based on specific sessions. It helps you anticipate price movements and maximize your trading opportunities. For instance, gold often exhibits clear moves during the New York session since it is primarily influenced by the dollar. Keep in mind that different pairs have varying levels of movement based on the currencies involved. With these insights, you can enhance your trading skills and increase your potential for profits. I hope you found this information valuable.